Okay, folks, and we are live. Happy Sunday evening. I am dehydrated, so I'm going to be drinking a lot of water tonight, so forgive me. Okay, so we have, hopefully my audio is good. We have the S&P 500 now open, futures market / E-minis. We have gap down here, no great shock. Lots of headline news this weekend. 50% tariffs on Brazil, 30% tariffs on the EU, 30% tariffs on Mexico. These tariffs are higher than what they were back when, what do they call it, Freedom Day was announced. So it's going to be a big week. Let's check out the NASDAQ. First, let's let this simmer down. Let me go to comments, say hello to folks. Lee Cable, welcome. Mr. Franklin, good evening, sir. Tim, welcome. Danny, welcome. The market cannot continue to rally with just a few large cap stocks leading the way. Yes, market breadth. I agree. Bob Farrell, yes, legendary strategist. Thanks, Larry. I saw that posted in the forum. Hello, Bob. Happy Sunday. George, happy Sunday to you as well. Praying for CNC to get to 29. We'll load up the truck. Yeah. One thing I wanted to mention, we're going to go to earnings in a moment. A lot of these names will be reporting earnings this week in the healthcare sector. I did a video earlier today on UNH, MOH, and CNC. CVS, I did not mention. It is in that group. They report, as does CNC. I believe CNC is on Friday. So hopefully it gets walloped. And with or without earnings, I'll be buying the stock. It really doesn't bother me all too much. But the size will make a difference, no doubt about it, because it's a speculative play. We have the E-minis trying to do a reversal bar here. This is a 5-minute candlestick. Dallin. I'll try my best, my friend. Mr. Pete, welcome. TF Hatter. Yeah, please. Yeah, thanks, TF. Like, subscribe, folks. Help me out with the YouTube algorithm. It really helps me out. I would appreciate it. Let's move on here. Now that we have a little bit of a bounce, a little bit of a vibe for how we're opening up this session. We are opening down, and we are staying down. You have some buyers moving in here trying to reverse things. But let's face it, last Friday was not a good close for this market. And I would argue, watch out for bond yields, folks. As a matter of fact, before we do anything else here, I want to bring up the 10-year. You saw the 10-year yield and the 30-year yield break out last week. That is no joke. So the 10-year is opening down about 1/4 percentage point. Let's check in with volatility, and then we'll move on to the NASDAQ. Volatility up, consistent with the E-minis, obviously inverse. Let's create an alert here. I want to know if we put in new session higher highs. As for the NASDAQ down 0.5 percentage point. We have the second 5-minute bar that's opened up. Let's see whether or not we take out session lows. And for that matter, let's put in an alert just in case we take out the closing price of Friday. And it's possible. It just doesn't seem we're getting a reaction by the market as we did back in, what was it, April, when all those tariffs were announced. Now we have tariffs that are higher than what they were back then on most of the globe. And the market is holding up fairly well. Eyeglasses are digging into my nose. Okay, let's go to the small caps. Small caps down. Wow, 0.75%. Mid caps. Mid caps down 0.63% at the open here. Let's check in with gold. Gold, no great shock to move here. Gold is setting up for a continuation breakout. I don't think it should be a shock to anybody if we're not at 4,000 by the end of the year. Silver, massive breakout last week, trading up over 1/3 of a percentage point at the open here. Palladium, we're long of gold, we're long of silver, we're also long of palladium. Palladium is actually down 1.5%. I think that this is a buying opportunity. It is extended relative to the third standard deviation Bollinger Band on a weekly chart. So perhaps a week or two of a pullback. However, I think that the path of least resistance has clearly changed on palladium to up. Platinum futures also trading down about 0.5 percentage point. Copper's had a very nice run, opening down here by 0.29%. Let's take a look at the energy markets. Crude oil spiking up higher here. The CRB commodity index was up last week. It closed off the highs of the week, but that's your barometer for the price of raw goods, and the path of least resistance is up on a weekly time frame for the CRB commodity index. At the open, we have light sweet crude up 0.60%. A beautiful 5-minute candlestick. They tried to take it down. They reversed it to close up. My guess is that they break this out higher. We have a lot of resistance above on crude oil. But what's impressive is the fact that OPEC is going to be increasing oil production in August, yet last week crude oil was able to flash a bullish key reversal bar. So, nice. Let's take a look at natural gas. It traded off the lows of the week last week, and we're opening up 3.5% on natty gas. Let's take a look at a 4-hour view here. My guess is we have a stronger setup on a longer term view. Yeah, we do. You have an inverted head and shoulders setup. Here's your left shoulder. Here's your head. Here's your right shoulder. And here is your neckline. And we are now breaking out above the neckline of that inverted head and shoulders setup on a 4-hour time frame. Let's move on. Let's go back to the 5-minute view. We haven't looked at the dollar yet. Let's see what that's doing. That BRIC meeting did not go well at all. There's a chance with the system that they're developing that 1/3 of all global transactions could be using not the Swift system, which is the US based system, but the new BRIC currency system. And they settle transfers very, very quickly, much far faster than settlements in Swift. Swift takes 3 days to do a settlement. In the Chinese dominated system, it'll take about 2 seconds. Let's check in with foreign currencies. Euro, let's go to the weekly chart. Euro opening down. It was down last week. It's holding, what is this? I don't know. 15 period moving average. Get rid of this. Let's check out the yen. Yen is trading up. Potential inside bar happening. I mean, it was a pretty bearish week last week for the Japanese yen. We closed at the lows of the week, and we closed below that 21 period EMA in orange. That's not good. So we have a gap up thus far, no new weekly lower lows. I would want to set up an alert here to get notified of if and when we do. Breakdown. Okay. Let's take a look at with the sanctions on Brazil. We do a lot of imports of cattle from Brazil. That's live cattle /LE. Well, typo. Typo. This is a weekly chart. This is a pretty bullish chart. This is last week's price action, not indicative of this week's price action. Let's drill down, see how they're opening us up here. 15-minute view. Powerful view here of live cattle. Looks as though they're going to take us up higher, potentially new all-time record highs on cattle, given the new tariffs. Let's go to comments. Lee Cable. I'm loving the silver charts for the first time in years. You and me both, brother. We've been sitting with silver for a long time. Finally making the big moves. Markets could be pricing the possibility of the termination or resignation of Powell. I think that we would be down lower if that were the case. I think this is more tariff related. I don't disagree. They're certainly trying to relieve him of his position with the pointing the finger at him for not managing the rebuilding or renovation of the Fed building in Washington. It's apparently very luxurious, over budget, etc. Are we really surprised? Bob, do you think the carry trade out of Japan? Oh, no doubt about it. I don't. If you go back and take a look at the yen. I mean, the yen really hasn't done all that much in a while. Here, we've just been basing. But I'll tell you right now, they begin to break out the Japanese yen out of this huge, huge formation, and it's inevitable they're going to do it. Look at this. Look at this cup with handle formation. Let's get rid of this. And let's do this. Cup, handle, breakout. I mean, that's going to be a major problem for traders. Bond yields over in Japan are moving up higher. So clearly, this is going to be a very big problem for the equity markets, given that that type of liquidity that's coming out of Japan is just simply going to be drying up. That's probably one of the reasons why you have M2 money supply that is ripping through the ceiling, providing liquidity for the equity markets here in the States. And frankly, the Chinese are worse than us with all the liquidity they're pumping into the system. What else do we have here? Bitcoin. Bitcoin last week was up. Already on the week, we have new weekly higher highs on Bitcoin. Path of least resistance is to the upside. Agriculture, that's soybean oil. I don't want that. Soybeans, weekly view. No follow through on that bullish reversal bar from the prior week. Wheat, still consolidating, nothing to do here. Wheat, corn, again, another failure to follow through on a bullish reversal bar. So corn, wheat, soybeans, all under pressure here. XRP is looking interesting. You know, if there's XRP is one of those coins. I'm not a aficionado on cryptocurrencies, but the banks love XRP because quick settlements. I would be watching XRP here in the coming weeks and months. Okay, that is pretty much it for the futures. Let's check back in quickly, see what the NASDAQ is doing here. We're threatening to take out the lows. There's the 5-minute bar. Selling pressures is not overwhelming. At current, 65% of the trades are sell-side trades for this 5-minute candlestick. So it's not crazy. It's tug of war right now between bulls and bears. All right, let's talk about what's coming up this coming week in terms of economic data. On Tuesday, we get CPI coming out on Tuesday. The expectation is for a 2.7 handle on the headline number, 0.3% increase at the core. Watch the year over year. That's what the Fed chair looks at least on the PCE. He says he doesn't look at this all that much. Who knows? Empire Manufacturing Survey. We got a bunch of Fed heads coming out, managing the market. PPI, that's inflation at the producer level. Thursday, initial jobless claims. We get that every week. Retail sales. I'm going to be talking about delinquencies in a moment. They are on the rise. Watch out for retail sales. Business inventories. Keep an eye on business inventories. If they grow, that's a problem for retailers because they may need to cut prices to clear out inventory. Friday, housing starts, building permits, a forward-looking indicator. But all of this is going to be trumped by earnings. It's earnings week. Economic data is going to take a back seat. So tomorrow, you don't have a lot of big market moving names coming out. Mondays are usually pretty quiet. Verizon, that's not a real market mover, even though it's a massive company. But Tuesday, that all changes. We get big bank week. We have JP Morgan coming out. Citi comes out. Wells comes out. BlackRock. Also on Tuesday, Coca-Cola Corp, RTX, PayPal. Visa. I'm looking at this the wrong way. This is a different format. Uh, Wednesday, we get United, Goldman Sachs, another big bank coming out. This is for the month. Netflix comes out on Thursday. What else do we have? On Friday, it's a financial week. American Express and Charles Schwab comes out. Industrial comes out with 3M. I misread this earlier, so my apologies. This is a completely different layout than what they normally have. All right, so the FedWatch tool, I need to update this. I don't know whether or not the gap lower in the equity markets is going to have any influence on the Fed, and it did. This had a 5 handle earlier, and now we're at 6.7 probability of a cut in July. There's not going to be a rate cut in July. September, coin flip. This did move up. We were at about 60% only a few minutes ago before the market opened, the futures market. Now we're at 63.8. The probable go date here is probably going to be October. If they do raise it all, you got to keep an eye on the 10-year yield, and you also need to keep an eye on the CRB commodity index, energy prices, commodity prices. If they continue up higher, it's going to be very, very difficult for the Federal Reserve to cut interest rates. Also, if we get good earnings and equities move up higher, or God forbid, we get bad earnings and equities move up higher, guess what? That's inflation. Valuations of the market, we have the Schiller PE multiple at 38.12. Very close to coming to the equal to October of 2021. If we pierce that, then we're looking at the dot-com bubble, 1999, 44.19 on that multiple. And I'll be honest with you, folks, back then, it appeared we had a much brighter future back then. That was before 9/11. 1999, there may be not a lot of people on here that remember the year 2K crisis. There was a rush to build computers, get them out the door, because they didn't know whether servers were going to change to the new millennia, which they did. And so companies were buying ridiculous numbers of servers, ridiculous amounts of equipment, generating this type of multiple. We don't have that now. You have all of these companies, Palantir, NVIDIA, they're fully valued. I mean, they have frothy valuations. I'm not knocking them, but you can't have 2 or 3 companies driving the entire market up higher for very long. The Buffett indicator. In terms of valuation, we are 200% beyond the GDP of the United States, folks. We have never, ever been this high before. We are coming off of all-time highs. We're now down below the 2021 highs, but we hit an all-time record high on this indicator only a few weeks ago. The lovely Jody, welcome. The Fed's balance sheet. One of the reasons why the president is being so harsh with Jay Powell is that he won't cut rates and he continues to roll off debt off of the balance sheet. What does that do to longer term yields? Drives them up. At one point in time back here, let's go max. Here, through here, they paused here, then through here. The Federal Reserve was a net buyer of 10-year, 30-year paper. They're not doing that anymore. That was yield curve control. Now they are net sellers. They're losing money right now. Any excess profits out of the Federal Reserve is to be remitted to the federal government. They haven't had a profit in a couple of years. So the Federal Reserve continues to roll off debt, completely infuriating the president, because if they don't start buying the longer term treasury curve, what that means is that our interest payments going out of the country every single year, which is currently over $1 trillion, greater than the defense budget. All that money leaves the country. It's a great giant sucking sound of capital leaving the country. And here we go. This is what's going to be the kicker for the week. He's got gold at 3,400 on Monday, maybe. But we spoke about this earlier. We have 30% tariffs on the EU. This couldn't happen to a more miserable and horrible individual, Ursula von der Leyen. You want to talk about globalist, a poster child for globalism and communism? That's her. Okay. We have, this is a good chart in that it shows the reaction of the equity markets to the Freedom Day announcement. The stock market went into free fall. Not only have we retraced back up to make new all-time highs, we have valuations that are at nosebleed levels. And I'll be honest with you, I'm rather surprised that the equity markets right now, I mean, down a half percentage point. That's shocking. It's shocking we're only down a half percentage point. .44% on the E-minis. I mean, we can close up tomorrow easily. We can open up tomorrow on this type of price action. So it may look ugly right now. It's really not. So a very resilient market. The question is, are traders, bullish traders anyway, whistling past the graveyard? That is yet to be determined. We are highly extended here. I think that we are going to get a retracement. I think a healthy retracement would be back down to retest either the highs or the lows of this trading range on the NASDAQ composite. And if we hold, we move back up on good earnings, valuations become more reasonable, forward-looking guidance looks good, okay, then maybe you want to buy stocks. Right now, it's a very risky bet, especially with the consumer. Now with auto delinquency rates at 2011 highs. Think about it. That was after the financial crisis. We have delinquencies on auto loans at 2011 levels. Why is that? People bought cars over MSRP during COVID. They're paying a ridiculous amount to date on these cars. They have extremely high payments. The average payment on an auto loan, a new car auto loan, is like $750 per month. That's insanity. So the consumer is tapped. Student debt defaults are rising. We have a very, very troubled consumer out there. Also, you have the 30-year. This is ticking me off with stockcharts.com. I may be leaving stockcharts.com. And I have a better alternative. TrendSpider, link below, 35% discount on YouTube. Above on Twitter and Facebook. CON35 is the discount code, CON35. They're discontinuing my sharp charts. I'm really upset about that. All right, so last week, CBOE, U.S. Treasury yield, folks, this is no joke. This is a massive breakout of the 30-year bond yield. What this is telling us is that we just had the big, beautiful bill. We spoke about this last week. We have $30 trillion worth of debt and rising. This is the bond market saying we can't lend you this money anymore at these prices. This is nuts. You need to pay more. The only way to get these yields lower is either to A, bring down our debt, which is not going to happen, or B, the Federal Reserve is going to have to go back in and begin to buy that longer dated paper. And to move the market, if you think that over $9 trillion was high the last time around, You ain't seen nothing yet. They're probably going to have to go up to $20 trillion on the Federal Reserve's balance sheet because of the law of diminishing returns. Look what they had to do from back here, the financial crisis, right? They went about 4 times their balance sheet. Then they dropped it down, and then they exploded it up higher to nearly $9 trillion from $37 trillion. Excuse me, $3.7 trillion. They're going to have to go a lot higher to get the same effect on the economy. The law of diminishing returns. I covered a lot so far. Let's do some. Bob, I'm meaning to tell you, real estate in Rotunda, Florida, is down. Yeah, I know that the real estate market in Florida is really taking a hit. I know a lot of people that move down there. I guess the climate is one issue. Insurance is the big problem for most people down there. And correct me if I'm wrong. I don't want to put out my own opinion as being fact. I believe that's what the problem is. They had a big run up during COVID because they had reasonable policies down there. And now you have people that are leaving. So if you know anything else that's going on down there that I haven't mentioned, please let me know, and we'll share it out. All right, let's do some chart requests. Folks, we're going to be changing things up here in the coming couple of months. We're doing a refresh of the members area. That's under development. Phase 1 is under development. Phase 2 is going to be a redesign of the members dashboard, and members actually put this out there. This is the current look of the dashboard. When you first log in, these are the options where you can choose to go. So this is going to all be changed quite a bit. Pretty much nothing that you see now is going to be the same. So looking forward to it. In fact, I think I posted it. May have been a few weeks ago. Yeah, this year. This is the current trades page. And this is all going to be changed. This is kind of like a mock-up of a mock-up. But this is going to be changed quite a bit. So a lot is coming down the pike. And the phase 3 is going to be a real game changer, separating us from our peers, because we're going to be incorporating AI into the members area. So if you're not currently a member, consider signing up. And if you sign up, prices never go up on you if you're a current member. But after we get that phase 3 in, for new members, I'm going to have to raise prices because it's a huge investment. So more to come on that as time goes by. Okay, we have a few symbols to go over here. We have Bonnie Bean. We have Lee Cable, Franklin, George, Jody. Let's get to it. Let's begin with the monthly chart, a weekly chart, I should say. And since I read this wrong before, I spoke prematurely earlier. On the 25th, we get Centene Corp. That's CNC. I thought it was this coming Friday. It was not. I misread the chart. So again, I did a video on CNC, UNH, and MOH, the healthcare insurers. It's posted on YouTube and on Twitter. Go check it out if you like. After the live stream, ARM. And if you have any comments on any of these, leave a comment and I'll get back to you on them. ARM Holdings. Not a good week last week. We broke support. We had a breakout the week of June the 23rd. Very, very nice. The following week, we did a retest, and it was successful. It held. But last week, we gapped down. Whenever I see something like that, I tend to avoid it. I wouldn't be the least bit surprised to see a rally tomorrow, Tuesday, back up to this resistance level. Let's call it 153, around there. But in all probability, it's going to break lower. I think that I would be looking to see whether or not it holds 132 per share, because that's where you have historical support, automated trend lines. Let's check out the Fibonacci retracement tool. And that coincides with the Fibonacci retracement level. Let's see what the insiders are doing. Nothing happening on the insiders. This is a new company, a publicly traded company, so there's now no seasonality to discuss. Let's go to a daily chart. Yeah, you want to avoid this. This daily chart is not looking good. They try to recapture support on Friday. It was rejected. It closed just off the lows of the day. I would avoid. INMB. Oof. My guess here is you had a headline news that came out on this company. I'm not familiar with it. The time to have sold it was back here on this break of the rising trend line, the lower band. So, but you have a gap lower. You have support down at around, I would call it $1.40 per share. I wouldn't touch this right now. Excuse me. Daily chart. I mean, what a bloodbath here. You could get a rally up to $3.21. I would fade that rally, and I just wouldn't buy the stock here. It looks bad. It looks really bad. And what's not fair to you is that I don't know the fundamentals of the company. All I could say is that I would not initiate a new trade here. So I would, if I were long, it being a small biotech, I would probably be looking to fade any rally. But I would need to do more research on that. I just wouldn't initiate a new trade at this point. Let's take a look at what the insiders are doing. You had some insider buying back in September. No sellers. And let's see who this guy is. David Moss. I mean, he didn't have to buy. He saw something there. There are many reasons to sell. There's very few reasons to buy. So he saw something there. I just wouldn't touch this right now. I would need to do more research before I bought it. Seasonality wise, I don't know how much data we have here. We only have 6 years worth of data, not enough data to do seasonality. So right now, I would avoid this. It's a train wreck. I would just watch it unfold, wait for a consolidation, and then look for a better re-entry point or an entry point. NVDA for Franklin. Okay, so to me, this is the value of the automated trend lines, folks. Sell. If you get a higher high here, if you don't want to sell, at least think about booking some profits or using a trailing stop loss order, because historically, once we hit this upper band of resistance, we generally have a pretty significant sell-off on NVIDIA. It's pretty reliable. Let's go to a daily view. topping action on Friday. I don't know. I certainly wouldn't initiate. I'm a seller here on the video. I think it's time to feed the geese. Look at that. Here's your ascending wedge formation. We're trying to blow through the upper band. I definitely would not initiate. I would be booking some profits here, making them real, and moving on to the next trade. If you're an investor, different story. Maybe you want to sell covered calls. Norwegian Cruise Lines. It's had a nice little rally here. You can't initiate a new trade because you have resistance right up here at around 24 bucks a share. Where do we close? We closed at 22.62. From a risk reward perspective, not enough reward for taking on that risk. Now, if we got a retracement, different story. I would revisit it at around 21 bucks a share. That would be somewhat interesting to me. Right now, not interesting. As a matter of fact, let's go to the monthly chart. I think this is a better way to view this stock from a much more high level view. Because what we're doing here is that we're trying to put in a base. And when you build a base, it's wrought with landmines, wrought with disappointment. You have false head fake breakouts. And then you pull back and you retrace, and it builds a base. Ultimately, you're building that cup, and you're starting to build the right side here. I don't even think I would open up a position at 21. I think I would wait for 20, 19 on an extreme pullback, and then I would look to enter a position because you have really good support down there at around, let's call it 19.50 per share. So my entry point would be at $20, $19.50 to $20 per share. I wouldn't buy it right now. I wouldn't sell it. I think it can still move up higher to around 24, 25 bucks a share. Google for George. This is a monthly chart. It looks as though Google could probably still move up higher to 187, 188 per share. I think it's going to happen. This is a nice consolidation here on Google. I think that's exactly where we're going, is right up here, 187.73. I think it's a good-looking chart. Let's go to the daily view. It's already begun to break out. There's your breakout point. If it hits 178.50 tomorrow, I'd be a buyer, assuming that the market is not in free fall. Let's take a look at CLF. Oh, as a matter of fact, before we do that, let's go to insiders. No buying, nothing interesting there. Seasonality. July is tied with October and December for being one of the best months out of the year. January being the best month to own Alphabet, Google. Let's check out a view of seasonality by week. This coming week is not a great week. Next couple of weeks are not great weeks for Alphabet. However, I think you can't use seasonality to define your trading. I think that we began to break out last week. It looks as though we're probably going to move up higher. Now, when am I wrong? If we close down below the lows of Friday, then I'm completely wrong, and you want to avoid it like the plague. Oxy is the last chart up. Let's go to a monthly chart here. These names are beginning to show signs of life. And what's impressive is that the energy stocks are correlated about 75, 80% with crude oil, light sweet crude. And you have the Saudis, OPEC in general, they're going to be increasing production in August. I mentioned this earlier, I know. But the fact that oil is trading up on that news, and we know that there's a correlation with oil trading up and energy stocks moving up. I'm a buyer of energy stocks right now. We own it. We own an individual name and an ETF. I do not own Oxy, for the record. We have broken out of a downtrend channel. We did it actually back here in June. We have yet to take out the highs of June. But when we do, I think we're heading up to $50 a share in a heartbeat on Oxy. Here's the weekly view. You have an established higher low. What does that mean? Just like it sounds, higher low. What I'd be looking for here is a breakout of this triangle formation, get a retest, then you're going up to 50 to $51 a share on Oxy, probably pretty quickly. Let's take a look at the insiders and what they're doing. You had some buyers. Oh, Berkshire Hathaway, they were buying. They must be greater than 10% holders. Nope, I guess not. I wonder why they're showing as an insider. Oh, they're on the board. That's why. That's why. Yeah, they're on the board. Okay, that makes sense. Let's go to seasonality. Oops. Okay, this is data going back 50 years. That's a little bit too much data. Let's make this more relevant to our purposes. Let's go to 2010. All right, for the month of July, Oxy usually closes up 50% of the time. August is by far the worst month out of the year. And then pretty much the entire year is a coin flip with the exception of May, June, and August. Other than that, it's a coin flip. But I do like the setup, so I'm more bullish than bearish on Oxy. Let's take a look at seasonality for the triple Qs. Triple Qs for the month of July are up 70% of the time. Then they begin to drift off into August, then September. February is the worst month out of the year, but September is not that far behind. Let's check out by the week. This coming week is not a great week for the Qs, up only 42% of the time, going back 19 years. The following week is far better, and then we drop back down again. Let's take a look at the S&P 500. You take a look at this chart before we go to the seasonality. I mean, this is a beautiful breakout. We broke out the week before last. Last week was a retest. We held and we closed positive. If they gap us lower and closes down below 617 per share on the SPY, that's a big problem for the equity markets. You are welcome, Jody. Same to you, George. Franklin, you're very welcome. So now the seasonality. Going back 33 years, let's tighten that up a little bit. Let's go back and use 2020 as 2010 as our go date. July, by far the most, not by far, the best month out of the year, with November right behind it. August and September are not great months for the S&P 500. So warning flag on the track for the S&P 500. Let's take a look at a weekly view. For the next 2 weeks, where odds favor bulls, that all changes as we proceed into August. So warning flag on the track. All right, folks, so I think we pretty much covered it all. TF Hatter, NVIDIA, what do we have? Let's go to the insiders. Oh, look at this. Looky here. We have a lot of insiders selling at, let's go to just officers. You have some selling, not a ton of it. %10 holders, none of them are selling. I don't think anybody's got 10% of that company anymore. So a little bit of insider selling on NVIDIA. Hey, Sean, welcome. Yeah, that's a possibility. It's a possibility. I may be down in Tampa in the next couple of months, so more to come. Not Tampa, Clearwater Beach. Clearwater Beach. All right, folks. Everybody have an awesome rest of your evening and have a profitable trading week. I will